Hello and welcome to another brand new episode of What the FinTech, the podcast from the team behind Fintech Futures and the Banking Technology magazine. My name is Paul Hindle, editor at Fintech Futures, and for this episode we're joined by author and financial services executive Rita Martins. Rita, welcome to the show.
Thank you. Good to be here.
Excellent. It's great to have you here. And just to get started, we'd like to quickly let us know a bit more about yourself and your career so far.
Yeah, so I started my career in consulting, so in NSN and UI, and I was really doing big digital transformation projects. So from target operating model to looking to new technology and how that technology could be used to transform and to innovate some of the financial services companies and clients that we're talking with. I then moved into HSBC. So I was at HSBC for almost 5 years and I was heading FinTech partnership. So we called it FinTech, but again, it was really at these startups that were leveraging technology and seeing if we could either use the technology internally, for example, from a compliance perspective or from a risk perspective, those teams that they tend to use quite a few different tools, for example, or could we collaborate with that startup and create a white label solution for our clients? So always looking to new technology and working with financial services. Last year, I took some time off and I wrote a book called Web3 in Financial Services. And really the goal of the book was really to just showcase some of the blockchain, some of the use cases and companies that are leading the way.
Excellent. Sounds great. And again, it's great to have you here. And thanks so much for taking the time out to speak with us today. On the show this week, we'll be taking a look into the growing role of Web3 technologies in financial services, with a particular focus on the key takeaways from Rita's recently published book on the subject. We'll cover some of the key real-world use cases for Web3 tech in the space and how financial services players have been looking to deploy the technology, the current state of play with trending topics such as tokenisation, CBDCs, and crypto, as well as take a look at some of the hurdles that exist when it comes to the wider adoption of emerging Web3 technologies globally. That's all to come shortly, but as always, we'll open with our news in numbers segment. So this is where our guest has gone out and found a news story featuring an interesting number to discuss and get us started. So, Rita, what have you brought along for us today?
Yeah, so I brought along the CEO of Robinhood and how he was making a strong statement, really saying that the cost of running a crypto business was in an order of magnitude lower than just a traditional business. It was very interesting because Robinhood, they acquired the crypto exchange Bitswamp for around 200 million recently in June. And now they're coming with this statement saying that they run both crypto and non-crypto business. And they were saying that really it is much cheaper and to run the exchange on public infrastructure.
Excellent. Yeah. This is from a conversation he was having with Fortune. But I mean, is that something that you would agree with and something that you found from your work on the topic, specializing especially in blockchain?
Yeah, so I think that's definitely like one of the key benefits. It's really that because it's a decentralized infrastructure. So you have quite a few, first of all, innovators, because you have all these developers across the world building on the infrastructure, but also they are running the different nodes. So the cost is definitely much more streamlined than if you have to hold a database or a system yourself and you have to take care of all the costs. And I mean that they are running both businesses, and it's interesting to now start seeing some of the numbers coming to play, because I think until recently, the interesting part was that there was this benefit around cost efficiency and lower costs from blockchain, but we didn't have the numbers to back it up. And now with some companies like Robinhood's having both, they're going to be able to actually start looking to numbers and start sharing that numbers with the industry to really validate some of the theory of the benefits.
Excellent. Yeah, I mean, looking specifically at blockchain technology, then how would you say the landscape and the perception around blockchain has evolved in recent years? Because it doesn't seem too long ago that it was just linked to crypto and some felt it was a solution in search of a problem. But after it seems like AI has picked up a lot of the hype now and blockchain has just been quietly going about its business and the use cases seems to be popping up. It seems to be having almost a renaissance now.
Yeah, for sure. It's interesting because when I started looking into blockchain, it was a time that I was at Accenture, so around 2017. And to be honest, at the time, it was too early from a technology perspective. There was no regulatory requirements, and it was very much, like you're saying, still seen as something that was happening in the back corner by some specific small group of people. While nowadays, we have a very different landscape. there is much more regulatory clarity. So MiCA in Europe is a great example of that. But also you will have seen much more bigger companies who have done POCs or have done testing for many years now saying, well, actually, we do understand the business case for these, and now we want to look into scaling solutions. So I think right now we are at a much more different landscape in phase in which crypto is probably less in the news, and it's a good sign because it means that people are building instead of having some of the hacks and the terrible news all the time. And we have really seen that now that we are at a much better phase within the industry. The other interesting one is really the ETFs. So it took us a long time to get a Bitcoin ETF approved in the US. And a few months after that, we already had the Ethereum ETF submission. And after that, we had the Solana ETF submission as well. So that also just shows us that the momentum has shifted. People really see that the approvals for some of these ETFs are now closer to being going forward. So ETFs might be approved. And that really shows as well that there is a change around how the regulatory requirements and clarity are going to help some of these startups and companies who have been building for a while to now come and actually start plugging into the financial ecosystem.
You've recently written and published a new book, as you mentioned at the start of the show, so Web3 and Financial Services, How Blockchain, Digital Assets and Crypto Are Disrupting Traditional Finance. Can you tell us a little bit more about that then and your main drivers and goals behind writing that?
Yeah, so I think this is a super interesting space, but it's really hard for anyone to know where to even start. There are a lot of curious people that really are curious, that have heard about blockchain, that have heard about crypto, but they still don't know what does it mean? And they still don't know where do they even start because it's evolving all the time. And so the goal of the book was really to just explain in simple terms, what are the real use cases? What are the companies that are building some of those use cases? And interview some of the experts who are leading those teams. This is such an interesting technology and innovation that I wanted to make sure that the book showcase a few different voices. So voices that come from a much more traditional environment and voices from individuals who are working in much more the startup world or into the DeFi world, the decentralized finance world. And so the goal of the book is really for anyone who works in financial services, who wants to learn more about it. It doesn't touch in very detail into technology, into the technical components. And that's really on purpose. I wanted to make sure that this is a book who can be read by anyone he's not a technologist. I'm not a technologist myself. And I think sometimes we spend too much time talking about the technology that we lose a lot of people. And so the book really tries and showcase some of the business values. It showcases some examples, some stories of companies and what they are doing within this space.
Excellent. What's the reaction been like to the book so far?
Has been great. I was surprised of how much curiosity there is within this space. Even people who don't work within financial services on day-to-day job, they have heard about blockchain and they have heard about crypto. And I went to some friends' drink the other day and none of them work in financial services or even in technology. And as soon as I mentioned that I wrote a book recently, there was all these different questions of people just being curious about this space and wanting to know what does it really mean. So has been really great, a positive reaction from everyone, it's great to hear.
Yeah, excellent. It does seem there's lots of interest going around in the space at the moment for sure. I mean, when it comes to Web3 technologies in financial services in particular, do you think now we're reaching an inflection point where those not using or experimenting with the technology are at risk of being left behind?
For sure. So we are now at really a convergence where we're seeing the traditional finance companies, for example, big banks, they are now much more into scaling solutions. And with the regulatory requirements, we also see some of the startups now having some guidelines. The problem until now was that from a startup perspective, for example, there was no clear guidelines around what they can build or cannot build. So there was always the risk that they were building something which eventually would have to be changed. Now with that regulatory clarity, startups, they can really define what product they're trying to build. And we have seen many of those startups now being engaging with some of the bigger players, and that will really enable some of the distribution. So like you were saying in the beginning, until now has been quietly in the background, but I think we will be surprised in the next few months or in the next few years how actually the distribution is going to be much bigger than we might be expecting.
Excellent. Yeah. I mean, what would you say are some of the key use cases then for Web3 tech in financial services, and what new business opportunities does the tech present, especially, I guess, focusing on maybe some of the use cases that you found from researching your book?
So it's interesting, and it does depend as well on which country we are on. So it does depend around like how evolved is the financial system or even the country development. Looking at emerging markets, one of the use cases that I found fascinating, which is in the book, is around remittances. So in the Philippines and also in Asia, it's quite common for individuals to go and work in another country and then send money back to their families to support their families. And in the Philippines, they are using this fintech company, which is using blockchain and stablecoins in the background. And so now they are sending money home in a much cheaper way and in a much faster way because there is less intermediaries and it is much faster. From a business model perspective, for example, there is a clear new opportunity here for companies to play that role right now around enabling those remittances. And we have seen, for example, a few stablecoin companies coming into the industry and now operating in the industry. From a UK, Europe perspective, so much more developed country perspective, some of the use cases are much more around providing operational efficiencies, providing some innovation in the payment space. So some of the financial services companies, they are looking into tokenization, which is one of the big words, and others as well that have looked into the custody. So being a custodian for digital assets. The other use case, which is interesting and it's not always talked about so much, is really identity. And digital identity is something that will enable all these new ecosystem in the blockchain. You're going to be able to have a digital identity that really reflects some of your existing identity, but also other additional factors. Like, for example, if you have a loan in a digital finance in DeFi, or if you have crypto, for example, you could now start using that for getting a loan with a bank, with a physical bank. And so I think those two worlds are going to be merging together. And digital identity is going to be super important and super crucial for that. Even in Europe, for example, they're already looking to digital identity, not even from a blockchain perspective, but much more. How do we enable our physical documents to be available digitally? Because we are getting much more connected. So if you are part of Europe and let's say you live in France, but you go and study in Italy, for example, then with your digital identity, you are able to open a loan much faster in Italy because it has all your documentation from France. So I think digital identity is one of those that it's not always talked about as much, but it's one that is as well definitely coming. And we have seen some big players looking into it.
Actually, yeah, no, definitely exciting times ahead, I think, for digital identity there as well. And I mean, we're hearing a lot about, as you mentioned quickly, their tokenization as well at the moment. I mean, why are banks and other financial institutions then so excited about tokenization? What are some of the benefits to come from that?
Yeah, it's interesting because tokenization is really the killer use case. All the big banks are really looking into it, and they so many different solutions and so many different pilots. The benefit of tokenization is that it really allows 24/7 trading, and it also allows almost instant settlement. I don't know if you're going to have really atomic settlement, but it allows instant settlement, which helps reduce as well some of the fails. So as an overall, will help reduce operational costs and efficiencies, and can even bring liquidity to previous illiquid products. So that's a very interesting business case for traditional players, and it's one that they are already, many of them have already done POCs and pilots, and now they think about how they're going to scale it.
Great. Yeah. And I mean, taking a look at digital currencies as well, central bank digital currencies continue to be a trending topic in the space. In what role do you see CBDCs playing in the future global economy?
CBDCs is another interesting one, and it does go into two buckets. So we have the retail CBDC, which, for example, in emerging markets, there are a few countries that have already deployed retail CBDC from a financial inclusion perspective, for example. And then we have developed countries like UK and Europe again, where they are looking into the potential of using retail CBDCs for innovation of the payments. And I think they are already playing a role, especially if you look into the emerging markets and the ones that are live nowadays. But I guess the adoption rate hasn't been as fast as some people would think about. And it's interesting, there was a recent article around Bahamas has a live retail CBDC, but they haven't seen the uptick in the adoption. And so they are thinking, or they are considering, to maybe make it mandatory, make it that everyone has to use retail CBDCs. And that's a really interesting view around, it's not just because you provide retail CBDCs that they're going to be adopted. Need to make sure that there is a real use case and it's super simple. And you almost have to sell it to the retail individuals why they should be using retail CBDCs. So I think there is definitely an opportunity there, but I want to just keep an eye out on how that one goes in Bahamas and if the fact that they make it mandatory will change it. And to be honest, that's not unique to CBDCs. For example, in Brazil, with PIX, they made it mandatory. And that was one of the key KPIs that really helped them in Brazil to get a big adoption of PIX, which is a new payments method that they have in Brazil. And then from CBDCs, there is a second use case, which is the wholesale CBDC. And that one is being much more used between banks, for example, for wholesale payments. And I think there is definitely a use case there, but it still hasn't taken the adoption we could expect. So I think both of these cases around retail and wholesale CBDC, there is potentially use cases and there is potential benefits, but it's still unclear if the market really see those benefits and if they want to adopt it.
Yeah, for sure. It'll be interesting to see how that goes forwards. I mean, on the retail side as well, especially in the US, there's been a lot of focus on privacy concerns and worries of potential government control when it comes to CBDCs. I mean, what's your take on that? Will they ever gain that full trust of consumers?
Yeah, it's an interesting one. US is quite vocal, but I think it's one that it goes across, even in Europe and UK, when they talk about the digital power, it's surreal. That's the first thing that anyone on the streets, they're going to ask is like, what is the privacy requirement here? And I think one of it is just customers' perception. I think the perception that the solutions that are being built, the central banks are going to be able to see all your data is not 100% accurate, especially some of the design models that are being considering by the central banks. So in terms of the design model, most of the central banks, when they're looking to retail CBDC, they're looking into the indirect model, which means that the CBDC is going to be provided by a third-party wallet, fintech. And so central banks cannot see the individual's payments, they cannot see the individual's information. There is a fintech in the middle between the central bank and the customer. So I think from a design model, that is being considered. But of course, retail clients, they don't know these details. So there is also that lack of perception or lack of education of what does it mean. But I think it's definitely still a key consideration, right? I mean, it is providing potentially, if for some reason the central bank, the individuals in power change, could have full surveillance for what the individuals are doing. So I think we shouldn't be dismissive of that worry, but I think there are tools that can be put in place to make sure that doesn't happen. So one of them is, like we're discussing, the indirect model. And the other one is around, for example, using new tools like zero knowledge proof, for example, in which the data is masked. No one is going to be able to see the data. Or even some central banks are looking to offline payments as well. So with offline payments, they don't have access to the data. And finally, the last one, which is one that both in UK and Europe they're looking to, is making sure that there is a legislation that really states that central banks cannot use CBDCs from a privacy and a surveillance perspective. So there are some tools and there are some key things that we can put in place if we're going to go into a retail CBDC to prevent that privacy. But the question is, how do we educate the retail clients on how that technology and the design model is being put in place, but as well, how do we make sure, again, that the use case is really valuable for retail clients? Because that's the other question is, they think there is a privacy concern, but also they don't really see some of the retail clients. They still don't see the added value of having a retail CBDC. So I think there is a bit of education and making sure that the user experience is as simple as possible.
Excellent. Yeah. And I mean, moving on to, you mentioned it earlier in the show, but moving on to cryptocurrency as well, and just in general, I mean, what's the sentiment like around that in the industry at the moment? Are more businesses looking to embrace crypto, or what kind of role can crypto play in the global financial system moving forward?
Yeah, so it's interesting, and different players that will have different risk appetites. So some of them will just look into tokenization and other solutions which are much more around efficiencies and processes, and other solutions like Robinhood we were just talking about, and other ones that will just look into crypto much more from an exchange perspective. Like we were discussing at the top of this episode, crypto is slowly getting much more embedded into financial services. So the ETFs is really interesting because now more and more people are actually holding crypto indirectly. And the next phase, which the industry is always talking about, is actually even having those ETFs into pensions. And when we have ETFs into pensions, we will have even more just normal individuals holding indirectly crypto. So I think it's slowly getting embedded into financial services in the background, but there will be businesses and there will be companies, of course, that will not want to touch crypto just because that's not part of their business model. That's just not part of their risk appetites. And that's totally fine, to be honest. I think even the clients, they have different risk appetites. So there'll be clients who want to hold crypto, directly crypto, and they have a higher risk appetite. And there'll be the ones that want a lower risk appetite. So they're going to look into the Fs because they still want to be part of this industry and this opportunity. And there'll be the ones that have very low risk appetites and they do not want to touch crypto at all. And so I think the different solutions are being built for those different risk appetites.
Excellent. Yeah. So, I mean, looking at obviously Web3 technologies in general, then what are the hurdles that you think exist then when it comes to the wider adoption of these technologies?
The first one is still regulatory clarity, especially if you look into the US. I think that's still one of the major blockers. And there are a number of really interesting companies in the US. They are trying to speak more about it and trying to drive the conversation into a bit more clarity. I think that would really unlock some of the opportunities, especially in the US. And the other one is really the UX and the user experience. It's still really hard to engage into this ecosystem. Even for someone like me who really understands this space, it's still a lot of different steps, and they still, you need to have MetaMask, for example, for some solutions. You have a self-custody wallet. If you say that to a normal person on the street, the first question is, what is a self-custody wallet? And then if you tell them, well, you're going to have to pay gas fees, like, well, what is gas fees? So there is a lot of different steps. There is a lot of different new terms that the person on the street doesn't understand. And to be honest, they will just make them not want to engage within this space. So we'll need to unlock that, and we need to be able to make it as seamless as possible. And this is interesting because this was something that, for example, the fintechs that really brought into financial services a few years back, they really brought that really super seamless user experience. And so I think what's probably going to happen is that we will have the startups, the DeFis, bringing in the new interesting solutions. And then we'll have a fintech or we'll have a bank who actually just sits on top and creates some seamless user experience and really abstracts all the technology into the background.
Excellent. Yeah, and just to finish things off, I mean, how optimistic are you about the wider adoption of Web3 tech then going forward, and how do you see the space evolving?
I'm super optimistic. I think it's coming. We have probably talked too long about the technology, which we shouldn't have. And now we're moving into actually talking about the solutions and talking about the user experience and the problems we are solving. One of the key things that really we need to unlock as well, that many companies are looking to it, is distribution. So now we have very interesting solutions being created by big companies, but they are not talking to each other. And so we have a lack of liquidity into some of the marketplaces, for example, in trading. And so starting to connect all these different solutions, I think will bring a bit more liquidity into this space and will make it much more interesting. I still think that bringing some of the big players, bringing some of the big banks will allow some of this distribution. And again, to the other point we're making around fintechs, I see quite a lot of similarities around the fintech story and the blockchain story. When fintechs, like many of them started with the view of, we're going to come and we're going to disrupt the industry, we're going to disrupt banking. But then they realized that actually banks that have really big client bases, they have that distribution. And so many of the fintechs, they changed their model to then being trying to sell directly to the client, to saying, how do we partner up with a bank that has a client base and can allow us to really reach all the clients that we want to? And I think something similar is happening within blockchain. Until recently, you had a lot of different really interesting startups coming into this space saying, we're going to disrupt financial services. We no longer need intermediaries because we're using blockchain. And some of them realizes that actually financial services is a very complex industry. There is all the regulatory hurdles, and also banks still hold a lot of distribution. Many people stay with the bank that their parents had. There was a study in the US that said that US clients were staying longer with their bank than staying in a marriage. People really did not want to, they do not think of changing a bank. That's the reality, which is fascinating because especially nowadays with the digital world and the new generation, I think they just used to change everything. But banking, for some reason, is something that people still want the one that their parents have because it's a trusted brand that they really want to make sure security, I think, is still a key thing for them in terms of banking, in terms of financial services. And so I'm seeing the DeFi startups and the startups within blockchain now saying, well, actually, for us to be successful, and they are already super successful. Think about DeFi, they have really big TVLs, but in comparison with the full financial services, it's still small. And so we're seeing them now actually converging and saying, how do we partner up with the big banks who also now get blockchain? They are fully bought into the business case. And so startups saying, how do we tap into the banks to get that distribution? And I think that's what we're going to see in the future is that convergence between what's happening in the DeFi and what's happening within traditional finance coming together. And that's really going to unlock the distribution and the client base that is already happening in traditional finance.
Thanks again, Rita, for chatting with us today. I mean, to close out the podcast, we have our now infamous Fintech Jails. This is where we ask for an industry term, buzzword, or trend that you've seen or heard enough of. Or, of course, you can advocate to free one of the previously incarcerated terms. So what would your selection be for this week?
Well, I guess I couldn't pick another one than tokenization. I think every 5 seconds we hear about tokenization, which, again, we need to start talking about the technology and what's happening in the background and actually talking about the solution and what problem we're trying to solve from the client perspective.
Excellent. Yeah, because I mean, you mentioned that this was the big use case earlier in the show as well. I mean, is it just the hype around it now is just getting a bit too much and just need to, like you say, get down to the use cases for it?
Yeah, I think we have talked about it. Like there is definitely something there and the banks are definitely seeing the value there. but we shouldn't be talking about tokenization, because tokenization is a technology. We should be talking about, okay, this will enable more people to be able to buy shares, for example, or this will mean that your bonds are now going to be able to be settled within seconds instead of 2 days. So we need to start talking about things that really impact the user and the clients and less about the technology. We don't know. I mean, I have no idea how my phone works. And I guess you the same. And we use our phone every single day. And for me, it doesn't really matter. What I want to know is that if I want to, for example, check in into the plane, it shows up on my phone. Is super seamless. I don't really know or care, to be honest. And I shouldn't, on how does that check-in comes into my phone and I tap it in and I'm checking into a plane.
Excellent. No, that is a very good point. I have absolutely no idea how my phone works, so you definitely got me there. So, I think, like you say, I think I'm more than happy to add this one into the chat. Now, it has been a hot topic, so I'd imagine we may have some guests looking to break this one down again sooner in the future. But for now, Rita, thank you so much again for joining us on the podcast today. It's been a pleasure.
Thank you.
Well, that's all we have time for this week. Thanks, of course, to Rita for joining me. As for Fintech Futures, you can find us online at fintechfutures.com, on X at Fintech Futures, and of course on LinkedIn. If you like this podcast and our other episodes, you can subscribe on Apple Podcasts, Spotify, SoundCloud, or your favorite podcasting service to get notified about future episodes. Thanks as well to Arama for editing this podcast. You can check them out at arama.tv. As always, thank you very much for your support. We'll see you soon for another episode of What the FinTech. But until then, goodbye.